diligence into that's due diligence here while it's late and my brain is fired up and hot. It's just a very short video about one of the machine learning prediction that we use to sort of verify our hypothesis. And a lot of you guys, oh my god, like, it'll be like, hey, oh my god, guys, like, you already established the fact that, okay, the algorithm is really good at predicting long term, especially, long term in terms of if the predicting period of time is over 100 trading days, of course. And apparently, this model actually perfectly predicted the month and then the 2-week range of where NASDAQ is gonna hit all-time high. And you guys are like, oh, that's great. But right now, our market is going down right now, right? So does it mean that, can we also use this thing to sort of figure out what our downsides are and what are our short-term maximum downside? The answer is absolutely. And without going into my IDE, I can just show you guys certain price points over here. Let's see, right here. And then right here. These are two really important lines which associate with 13,500. Yes, 13,500. And then this is, I think this is 11,750. Yeah. Okay. So we translate that back into a little Weibo thingy. All right. Let's go to Weibo. Where's my Weibo? And you will see. And then there's a very interesting thing where you guys are like, oh my god, keep buying puts. But really, is buying puts really the way to go? So if you go to Weibo and go to look at on NASDAQ, let's look at this. So we talked about 13,500, which is right here. That makes sense, right? That makes total sense. That, where it should, like, why this is a very important point. Like, when the market drops to that point, it's gonna rebound, right? That totally makes sense, right? Because if it does, then it negated the entire years of growth, which in reality it barely happens. Among like 40 years of trading NASDAQ history, if it dropped down to this line and then it doesn't rebound, the probability of that happening is less than like 1 minus 87%, which is about less than 13%. But again, in a stock trading environment, if data have recency bias, that means most likely we have literally around 92% confidence level that if it drops under that level, it's gonna have a period of rebound that's just huge. Okay. Especially we're keeping count that inflation is no longer transitory, so then the stock market should go with inflation. Because if it doesn't go with inflation, then we're actually in a deflationary inflation dilemma. We can also make a video about that. But anyways, this one should be short. Hopefully it's short. And then another one we said is 13,800, right? 750 right here. So how do you interpret this? Well, it's simple. Whenever it reaches those 2 points, it's probably gonna the day you buy in. Like, for example, right? If the market goes like this, if the market goes like, all of a sudden it drops to this point, on the day that it drops to this point, the second day when it started, when on the second day, let's just say the market opens low. If you buy in this point, you're guaranteed this much of return. Technically speaking. Well, technically you're guaranteed about 3.5% over the lowest point of market entry. Okay. All right. Yeah, basically. And this also tells us that the real growth of NASDAQ over the past year is this much, which is 13,500, and then about 11. It's about 11. Let's see. I said 750. Let's just say it's 11,500. So it's actually only 2,000 points of real growth. And then all of this is inflation plus predetermined value oversight, right? Like because the market is trading on future value, and plus, growth, like some form of growth that we're anticipating or we see with like earning estimates or whatever. Because if you go back and look at a lot of the earning reports, if you go back and see earnings, you will see that a lot of those companies actually tuned down their earnings by about like 5%. Some even did a 10% earning estimate drop. This is why, like during 2020, a lot of those companies' values actually went down, and then all of those values are basically being counted back into this Nasdaq Ultra flip increase, right? If you take out your calculator, where's my calculator? You can see. So the real growth is actually 13,500 minus 11,750, and then divided by 11,750. A 14%. That's actually really normal, right? This is a normalized return on the Nasdaq. This totally makes sense, okay? So this totally makes sense. And then we have irregularity of, let's just say, 16,212, and then we want to minus 13. Oh, dang it! 16,212 minus, what did I say? 13,500. You will get about another 2,000 points over 13,500. So you have another 20%. So this much, right? You have another 20% of not so real growth there. Okay. So that means the maximum downside over the next 6.5 months, listen to me really carefully, is 20.1%. This is your maximum downside. Okay. So this is your maximum downside right there. But is Nasdaq gonna drop like all of a sudden by 20% on one day? I'm pretty sure it only happens a couple of days in about 40-year period of time. So the probability of that happening is very low. And if we go back and backtrack all the data, that it actually decreased by about 21% on that particular day, or 15 to 20% on a super ultra drop, or even a ultra drop over a week that yielded about 10% or 20% in total, a cumulative decrease. The second coming week's Monday, the call volume is through the roof. So if that happens and you just start buying like a lower, depending on how you structure your portfolio, and whether you want to do a waiting game or you want to do like a multi-leg strategy game, there's actually strategy to guarantee you in the coming week's Monday, you can make around at least 3 to 5% on your entire portfolio. And with leverage, and because you're trading options, you're actually making about 12% to about 37%. And the confidence level that kind of play is actually around 90% to about 97%, which is like wiggling in between 2 standard deviation ahead and 3 standard deviation ahead. Anyways, like all of these, you guys, it's gonna be covered in coming content, and this is just gonna be a short video talking about. I do think without the Fed actually lowering their interest rate, the Nasdaq, or it's actually easier to look at TQQQ. Oh, come on, not now. You will see a bigger turbulence level. You can totally see this already, right? If you plug whatever value in here into Black-Scholes equation, you will see that the volatility implied in here is essentially huge than this, right? I mean, that's normal. It's very consistent with whatever Nasdaq perform every single year during this period of time, and we're anticipating a Christmas rally too. But the Christmas rally might not be as big as previous years because of the uncertainty. But anyways, what's really gonna happen here is you're gonna see like very, very turbulent weeks ahead. But is the general trend line still going up or still going down? A lot of people are telling you to buy put is because they just don't know better. They think it's going to go down. But the general trend of Nasdaq, no matter how long time period you have for your calculation, or prediction or whatever, it's actually going up most of the time. It's going up, flipping on going upside over 50%. That means it's not a fair coin to flip. And most likely in a monthly situation, it's probably around 60%, so 60-40. So what does it mean is, the NASDAQ is actually going to go back to 170. But the question is more like, how soon is it going to go back to 170? And when it does, how soon is it going to drop back down to 160? And then the 160 and 170 range we're establishing here, where's the 160? Right here. So 160 range is right here. So you already see a liquidity gap over here. You see that? This is the observation time, right? You already see a liquidity gap over here. So the more interesting question is, so we all know that Nasdaq is going to trade flat, right? Most likely trade flat with a upper trend line somewhere before January 1st, 2022, okay? And then it's going to wiggle around this place. And the question is, how soon is it going to go over here? And how soon is it drop over here and drop under the liquidity gap? And then when it drops on the liquidity gap, it's probably going to establish another trend line over here. And then when it touches this line, it will gap up again. And then it will have a second attempt to wherever the average value this is, so around 160. So if you draw a indication line here, the actual indication line is supposed to look like this. So the super range is from here to here to here. This is the super range. You see the super range? And once it drops under the super range, you can literally buy in that day and then wait a little bit, and it will just go up to the second trend line of the super range. You can sell it. But the only problem with that is you actually need a huge amount of money in your account to actually trade that, because you don't know whether the super range gap down or gap up. Is it going to be a 2 week in a row, a 1 week in a row, or a 3 week in a row? And if it's a 1 week in a row, it's totally, great that you buy weekly options. But what's the probability of that happening? Less than 5%, okay? And then a 2 week in a row, most likely, right? And then a 3 week in a row is even more most likely. And for those of you who trade options for a little bit, you want to know that basically the longer extended period of time your option contract have, it has more value, and then thus you will pay more premium. But at the same time, when it go up to that point, your premium also will increase in a higher rate because you're paying for time. And yes, I will post another video on options, since we actually never covered the very basics of it, and I'm gonna make a series about options with some very simple terminologies of why you should trade it. Here are the very basics of it. And then if you use this, here are some rules of thumb that you should follow. Like the basic rule of thumb to follow. When do you exit? Don't get greedy. When do you add up your option period? When do you roll it? When do you like basically roll it? When all of a sudden we have a huge swing on a downturn in your buying calls, what you do with your on-hand calls? Is it a lost cause, or is it something you can remedy? Well, that really depends on what individual stock or what indexes you're trading. And then let's just say you look at the market trend and you see a put potential, but somehow the market have a great swing up. What should you do with the puts? And then the basic strategy behind what should you do with the proportion of your portfolio that you're buying puts, and what generally do you do when you buy puts, right? Like, what's the philosophy behind it? Why would you buy puts? Why would you buy calls? And then why would you mix puts and calls? Like, what are like optimal spread that you can do with all of that? They're all gonna be the educational content. And I just realized that Ethereum is dropping a little bit, and I probably should make a Ethereum video later on over this weekend or maybe next week. And around next Friday-ish, I think I'm traveling, but I'll be fine. So give me once I'm done with traveling, I probably will make a video in the airport and give you guys a quick update on myself and when I land and those kind of stuff. And then I'll probably take 1 day break, and then I will come back up and then record videos again. So all of the video schedules are back in shape, back into normal, and there's going to be better contents coming out, better contents with better support, with data. It's going to flip to a more technical side, but if you're not a technical person, we're also going to put some very general rules of thumb if you just want to know what to do, and those are supported by data. we're gonna make like short videos and maybe YouTube Shorts. Be like, hey, 3 rules that you should follow in the stock market: A, B, and C. When you see those things, buy in and sell the other day. And then if you see this and that, if you wait another month, most likely it's gonna go up. Anyways, this is it for this video. Hope you guys love it. See you guys on the upside.